Hi everyone, so I'm previewing the week ahead in financial markets. The big things to watch this week will be the central banks and the big US tech earnings. So on the central banks front, it's the Fed, the ECB, the Bank of Japan. That's obviously going to affect the respective currencies, the euro, the dollar, the yen. And then we have Apple and Facebook reporting Q1 earnings. And so keep in mind the stock market's been recovering for about 3 weeks now. These are big important companies. We want to watch these earnings and what they say about future earnings to determine if this stock market's ready to keep on going. Now in just a minute I'm going to look at the economic calendar highlights for the week, but before I do, can I ask that if you do like these videos, please make sure to click that like button. More people will see them and we can keep producing this free content for you. First on the economic calendar, we've got the Bank of Japan interest rate decision, and remember they're putting out their quarterly forecast as well. Remember last week oil prices went into negative territory. Well, we've got to watch these US inventories data. That's the API on Tuesday and the EIA on Wednesday. If they continue to produce these giant builds in inventories, storage is going to run out and we risk those negative oil prices happening again. Now on Wednesday it's US GDP and then the Fed interest rate decision, which I'll talk about in just a minute. And then we've got a rinse and repeat on Thursday where it's the Eurozone GDP and then ECB interest rate decision. And then on worth watching the Apple earnings specifically thereafter the close on Thursday. And then on Friday it's Labor Day holiday, so a few European and other markets will be closed. So on the central banks, I'll try and rattle through them all fairly quickly. Let's tackle the Fed first. They're the biggest and the most important. They've done all sorts of money printing programs. So that has been holding back the progress of the dollar. You remember when the stock market was crashing, the dollar was rallying? Well, it more recently, it's not exactly declined, but it's paused. And that's because of all these money printing programs from the Fed. The one I really want to concentrate on is the junk bond purchase program. I think that's what could move markets when the Fed have their interest rate meeting next week. Basically, they've said they will buy junk bonds. So that's non-investment grade corporate bonds. And obviously, if you're a bond holder in one of these companies, then you've got the Fed backstopping your bonds. So obviously, that's great for you. And actually, arguably, if you're holding the equity in some of these companies as well, also good for you. You've got the Fed backstopping the bond holders. Your equity position is slightly less risky than it once was. So that's been great for the stock market. So if they sound very aggressive on this policy, they're buying a lot, they're buying some of the riskiest sectors, anything that's aggressive, that should be bad for the dollar, good for stock markets. Basically with the ECB, they have an Italy problem. And so while the central bank's been buying all the government bonds of the other nations, pushing yields down, relatively speaking, Italian yields have been going up. Because obviously the economy is distinctly in trouble anyway, and now it's been some of the hardest hit from the coronavirus. And so there's more risk in Italy than elsewhere. And so the spread between Italian and German bonds is a gauge of Eurozone risk. That's been widening, showing riskier conditions. So we want to see what the ECB will do about this. I think probably they just do more quantitative easing. There's not much else they can do. They can't really allocate more towards Italy, but if they did, that would be interesting. That would be a deviation from before. That would be more aggressive, bad for the euro, good for European stock markets. Last but not least, the Bank of Japan. They have signaled, or it's been rumored, that they are just going to make an unlimited bond purchase program. So it's all the similar kind of stuff we're talking about here, QE. Central banks buying bonds, and so at the moment they've got an annual cap. They're thinking about just scrapping that annual cap. Then that means they can buy as many bonds as they like. Ultimately, that will probably help them reduce the number of bonds. It makes them a bit more flexible. At the moment, it means they'll probably buy more. That'd be bad for the yen, probably good for Japanese stock market if they did signal that unlimited bond buying program. So Apple, obviously one of those widely held companies out there, followed by so many people who own iPhones. And it is obviously all about the iPhone as normal. And so one of the things we'll be looking for in this set of earnings is what the plan is with the iPhone 12. Because the normal release date is September. It's a possibility that because of all the supply chain disruptions, the drop off in demand, it's possible that the 12 gets set back. that makes it harder for Apple to generate demand for their phones in what is clearly going to be a weak environment. We're pretty much looking at a recession globally for the first time in many years. In theory, a smartphone that costs over $1,000, that should be a discretionary item that people set aside when it's a recession. It's a little bit less black and white than that, because obviously most people have monthly programs with their phones. So if Apple can keep those monthly programs rolling around and the economy dips into the recession but pulls out, then actually by the time it's pulling out, maybe that Apple 12 comes out and Apple can actually ride out the storm. So that could be pivotal. The timing of that next iPhone release could be very important for Apple shares. Right, that's it for this week. Thank you very much for watching, and don't forget to subscribe so that you can see next week's video.